Okay, I think we're live and good to go. Hi, Doc. What's up?
Not much, not much. Been pretty slow the last few days. How about you?
Yeah, it
How you
definitely
doing?
feels like it. Found myself staring more at the S&P 500 chart more than anything else, which says a lot. But
Yeah, I
yeah,
mean,
not much.
some of this stuff in the traditional market's been just crazy. Tesla and I mean MicroStrategy and Arc and all of these names been wild.
Yes, yes, it has. Well, we have plenty to discuss on Casual Friday or Jujutsu Kaisen Friday. I'm your host, Ian Belina. This is the Money Team, and yeah, we've got some hot topics. I really like when this FA type of stuff lines up with really important technical levels, like I think is the case with ETH. So hopefully we get some pretty good insights. It's also very fitting that one of the protocols rug pulled just before the show. It looks like paid. Well, it's not rug pulled. It looks
Yep.
like it's been exploited for like 100 million or something like that. So I'm sure we'll get our guests' opinion on that. In the interim, before we get started, so we have an uninterrupted show. Technical Roundup is brought to you by Blockfolio, the mobile app where you can do your spot trading with a fee-less experience. We'll have more content coming from them in the near future. We've both played around with it, both think it's sick, and you'll hear more from us for sure. Thank you to Blockfolio for sponsoring the stream, and of course, here's our guest, Sobi. What is up, my friend? How's it going?
Taking the farming meme to reality, dude.
Nice. Are you all the way out? It doesn't look like your usual setting. What's up? Where are you taking a break? Decided to get some fresh air away from all this.
Yeah, for once, dude. I'm in Montana right now. I'm gonna go skiing for the first time.
Nice.
It's gonna be exciting.
I don't remember the last time I even remember kind of going anywhere. I know that sounds terrible, but it's just the state of affairs we've got um, in the UK with our lockdown right now. But it looks like the end is in sight, so there's always that. So yeah, thanks for joining us,
Cool.
man.
Thanks for
With the
having me,
beautiful
man. I'm
hair,
looking forward to it.
luscious
Thanks, dude. I
locks.
need a haircut.
I think we
Damn,
all
you really
do.
know how to flatter a woman, Cred.
Oh
Wow.
yeah, well it's been a while, mate. Let's just keep it at that. Do you want to introduce yourself? Who is Sobi? What are your interests? Why are you here to teach us and talk to us about Ethereum related things? Some context would be sick.
Awesome. Yeah. I've been in crypto for like 4 years now, I think. Um, really started like early in high school, but I never really held on to anything. I was like selling hats for TF2 or selling hats in TF2 for Bitcoin
Oh, sick.
back on like tf2skins.com or whatever. Then kind of didn't pay attention to crypto for a while and then kind of got back in mostly because of like Ethereum and stuff. Smart contracts were always a topic of interest to me. I think they're like part of my thesis on smart contracts is that they're going to fundamentally just change the way that we do business with one another because you can transact with anybody in the world in a trustless way, regardless of what currency they transact in or what language they speak, and that's a really powerful tool, I think. Right, and then from there, the crypto journey really started through like Chainlink, bought a bunch of Chainlink.
Good start.
Then I started getting, yeah, basically. I know the Link Marines and Donald have a turbulent past, but it is what it is. Um, and then so through kind of like Chainlink and smart contracts in general, started getting into different applications of smart contracts, and that's before it was even called DeFi. That was like kind of the thing that got me interested in that stuff. Was things like Aave back in the day when it was like ETH Lend. I was like, holy shit! Like, I think a lot of people that are bearish on DeFi or like Ethereum and like smart contract use cases, once they actually use a protocol for once, they're going to be like, whoa, this actually is something that could be interesting, right? So basically positioned myself pretty early into things like synthetics and Chainlink and Aave, and then did a lot of like it's funny because really I was not making very much money the first couple of years of crypto. It was like really rough, and I was holding primarily alts, right, not really trading derivatives because that's not really my edge. And there's not many ways to trade derivatives legally, right? So within that context too, I moved forward kind of into like the alt game and trying to figure out different use cases. But the issue with the alts is like a lot of them are scams, right? So it's been nice that I haven't been rugged too hard. And then when the DeFi summer started happening, it was really exciting. And it was cool to start seeing people getting more involved in things like SNX. I know a lot of people in our like social circle are like big SNX bulls, and got in early, and I think the reason why is because they are like traders and they see some value in like immutable derivatives trading. And I honestly think things like I really think that Aave has the potential to like become one of the leading like lending platforms in the world, not just in crypto. I honestly think in 4 years, Aave will probably be talked about as like the EU's best fintech startup ever, right? So within all that, the DeFi summer farming craze was crazy. Farmed Pool Zero on Base, did stuff with like Wi-Fi, and avoided actually rug pulls the whole time, which was fun. But that's because we had some people that were good Ethereum developers, so they could always do soft audits. And then really has just been leading the cause on that. Now I'm working on a few different projects that I'm building, like a real estate DAO type platform, and then I'm looking to building some stuff on Solana, and then kind of seeing like how other like the synthetic trading model can be differentiated. So that's what I'm working on with the guys over at Deus, who are just a really good team. And we're they launched like the Coinbase IOUs or whatever really early in the cycle. They just like ship products really quickly, and so just really focused on investing in teams that deliver projects and being here as a participant in the whole craze moving forward and educating people. So looking forward to it.
Nice, man. So, sounds like you've been around the block, so to speak. And would you say your main focus now, is it more as an investor? Are you building? Is there some sort of fund type structure, like something formal, or how do you position yourself in those terms?
So yeah, we just put together a fund structure, which is a huge hassle to do, right? Especially if you're like crypto native, it's like, oh, word, I can't just like send you money into like a smart contract. So we're working on that end, and then right now it's just investing. If I want to be like kind of like an activist investor, right? I think like the Parify model is a really strong model. Framework Ventures, a really strong model where, and so I think a lot of this is just inspired from like A16Z, the way that they're like activist investors in their products, where they either assist with like business development or talent sourcing, things like that. So that's kind of where my focus is right now, is seeing like if there's projects that really excite me, I'm going to buy a bunch of it, and then I want to get involved in the community in whatever way. And that's what's interesting about DeFi too, is like if you're active in governance voting, like you'll probably get airdrops. Like Ruler protocol just launched, and they're like a lending platform that where your loans can't get liquidated unless you like liquidate them yourselves. And they basically airdropped 2 Ruler to anybody that was in like a covered protocol or I think Wi-Fi, maybe another one that I'm missing too. And so I think that's what's interesting, is like one trend that I'm tracking closely in DeFi is I think your wallet's going to eventually become an asset, right? Because it's like you've been, and it's kind of trippy to think about, because there's this level of like obfuscation that people like doing with their wallets. But if you have like almost a social credit rating, or at least a history of participation in different protocols, that's like it builds a certain profile about you, right? And I think the next big trend too is going to be figuring out credit delegation in DeFi in particular, like because the DeFi model is pretty interesting, right? Like traditional banking, I only put up 10 to 20% of my loan's value as collateral, and I get the whole loan. And DeFi is the exact opposite. I put up the entire collateral, and I can get 30 to 60% LTV depending on what I'm using as collateral. And it's generating a lot of fees, but it's like frictionless. So that's a problem, or at least a pain point that I want to see solved. And there's a few things I'm trying to work on in that end too, on how can we increase collateralization factors, and eventually how can we get to loans that don't require collateral at all.
Yeah, the collateralization of DeFi, and by not having kind of recourse to the legal system probably being one of the main mechanisms to overcome. I want to take a step back, because as you can imagine, like Don and I are not very smart people. Sorry, Don, just I'm not divulging any secrets here. So when it comes to maybe the type of content our audience is used to, the FA side is admittedly thinner than we'd like, right? Which is why we love bringing on people like you to kind of educate and share insights from first principles, just in terms of like using current examples to maybe talk about some guidelines or principles generally. I'm just looking at paid network right now. I don't know if you've had time on your walk back to see that there seems to be some sort of everyone's calling it a rug or an exploit, or a mint function, and now those coins are being dumped. So if someone just has no idea, right, and they log on to Twitter and they see like, okay, this has been exploited, and pull your liquidity from the pools because you're going to get dumped on infinitely, it's a rug pull, etc., like for someone who has absolutely no idea, what's going on when these sorts of DeFi exploits take shape?
That's a great question, and it depends on like how the exploit kind of works, because there's different ways you can do attacks. A lot of exploits fall under an oracle attack. So oracles are in some way or the other, they're more than price feeds, but oracles are used as price feeds. So similar to like how on a derivative, right, you have your index, right, your price index, and that's like how the derivative is priced is through the index. But obviously it's much more difficult to do like an index attack now on something like Bitcoin, when you have to dump so much of it, right, to significantly move the market. And so the way that sometimes oracle attacks happen is you can basically be, your collateral can be over or undervalued. So then you end up being able to take more than what you should have been. And then there's some economic surplus that you are benefiting from, right? Some of the exploits are really complex, like the alpha one that happened a while ago. That one probably took a team of researchers to do. Then there's some that like, some like the more like rug pull type exploits is what just happened to Paid, right? So what they did is the admin contract has a function where it can mint tokens, so it can just mint tokens, obviously. And then they saw someone. A lot of people are always like tracking on-chain stuff with DeFi, which is interesting because it's not many like spot or derivative traders I think are utilizing on-chain analytics in their system, and I think we're going to start seeing that moving forward. But people are like listening into the smart contract. They see, oh, like, whoa, like why did this contract just mint a bunch of these tokens, and then it sent those tokens to different wallets that you can then check and see if, wait, was this wallet like a pre-sale wallet that's just getting a distribution? And so it's like, oh no, that returned is false. This isn't a pre-sale wallet. It's just a wallet that never contributed anything, but for some reason the project is minting tokens and sending it, and then what they just did is they just sold right into people's liquidity on Uniswap, right? So that's the part about that's kind of what I'm trying to work on. I just finally got my rebrand and everything done, so I can start making content again that I can be proud of. So it's education, I think, is the big thing. Is how can you manage your risk if you don't even know what your risks are, right? And to some level, it takes technical literacy, like being able to just look for certain things in a contract, right? So you just go like my goal is to eventually get people to the point where they can almost do some soft audits for themselves. Admittedly, I don't even really do this for myself because I have people way smarter than me that I like to ask them instead because I'm an idiot as well. But ultimately, I think we'll get to that point eventually. And there's still some technical aspects of Ethereum that make rug pulls like happen still. Like one of them is the approve function, right? And I think the approve function is just a super archaic function. And the way the approve function works is when you're interfacing with the smart contract, you get to allow the token or the smart contract to be able to send or transfer a certain amount of your tokens. Most of the time, like it's just defaulted to like a limited or like 100 million or something. But what the issue with that is that once you have like, you're just kind of giving that type of permission, that is like an attack vector that, something like Aave is not going to really do that, right? But if you just forget that you participated in some like maybe you aped into some small like market cap DeFi thing that you're like, hey, I know this is just going to pump, but that's it. All I'm going to do is just buy it real quick and pump and sell it. But then you forget, and then basically like whoever created that project is a malicious actor, and they go like, okay, I have all these contracts or all these addresses that have given this smart contract approval to have some degree of agency over their funds. And that's what happened with the Furu combo rug pull that happened. Was basically like that the contract that people had approved their balances to basically took their funds, and that was like through, because I think Furu combo was like a way that the way it was abstracted was like at some point it was interfacing with Aave, but it wasn't like it wasn't an attack on Aave's end or anything. It was just someone had basically, or not someone, the tag vector was that you had an approval with the Furu combo smart contract, which then interfaced with just your Aave like balances. I think I could be a little bit wrong in the technicalities of that, but it's basically something like that. And I think we'll eventually see the approval stuff change. And I would ideally like to also start to see insurance become opt out. Like insurance should already be within the protocol, and maybe you pay a premium or something for it, and you give people the who believe that they understand the risks of this yield farm or this DeFi protocol pretty well, and they know how to manage their own risk, and they don't want to actually pay that premium for insurance. Give them that option as well.
Yeah, I'm looking forward to just wallet management tools becoming more sophisticated. As you mentioned, when you surrender like agency or certain rights to these protocols, and if that's exploitable, I mean, that obviously sucks. But I wanted to ask you as well, like, we talk about ETH like a lot on this channel, and one of the themes that we found somewhat unexpected or even interesting is that while the DeFi stuff was just popping super hard, ETH was having none of it, right? Even before the Binance Smart Chain, I don't even want to call it an attack, but it's just kind of more of a right place, right time. Although I'd love to get your thoughts on that. It's just ETH just wasn't moving in comparison to a lot of the DeFi stuff. I'm just going to bring up the chart very quickly of ETH USD. And after it broke its all-time high, I mean, it went up, right? But in relative terms to what a lot of DeFi stuff was doing, and even Bitcoin, it just kind of underperformed many people's expectations, and it kind of retraced essentially all of its all-time high break, right? That kind of value transfer between how much DeFi was relying on Ethereum wasn't reflected in the price, and then ETH BTC looked really good for a very short period of time when it broke out from that like multi-year range above 0.03 or thereabouts, 0.035, and then again just on the way down was just underperforming relative to Bitcoin as well. It seems that there's some sort of, and obviously it got battered by the BSC narrative as well. A lot of participation in DeFi and interacting with smart contracts was priced out as well. It seemed like a lot of the narratives were just very inconveniently stacking up against the ETH at the same time. And now recently, as I'm sure you've seen, EIP-1559 has hit the news wires, right? It's one of the big bits of technical news floating around with regard to ETH with the London hard fork. I'm just reading from this CoinDesk article here, and I'm not a technical expert at all, obviously. But it looks like, there's going to be some changes to fees, mining. It's supposed to help scaling. For those totally unaware, right, purely contextually, we're kind of looking at ETH USD holding on to support. You've got ETH BTC holding on to support. One of the main narratives was just kind of ETH becoming unusable, scaling, etc. Could you give us a easy to understand, or in your first principles type of overview of what an EIP is, what specifically changed by EIP 1559, if anything? Can we expect it to be contentious, right? Are we going through Bitcoin Cash 2.0, or just anything that's on your radar with regard to this improvement proposal would be awesome.
Yeah, so damn, that's a really good question. With the EIP stuff, that stands for Ethereum Improvement Proposal. So that's both basically the way the etymology, or not etymology, like the way this stuff is standardized is it'll be like AIP is like an Aave improvement protocol. So that's just what like formal governance proposals are. So then people vote on that, right? And like it goes from like block like holders of ETH, and then also like the hash rate gets to vote, right? So what they're trying to do with EIP, and it just passed and said they're going to roll it out in July, is the first thing is they're going to make fees more predictable, right? So right now fees aren't very predictable because they're kind of dynamic in terms of like the way gas, spend, and GUI and all that stuff function. So in times of huge, it's really hard for you even to systematically maybe have a model for like in a time of huge usage, like what can I expect the gas fees to be like, right? It's really kind of all over the place. So that's one aspect of the proposal, is to make gas fees more predictable. And then I think it's going to really improve the economics of Ethereum. So on that end, what they're doing is basically there's going to be a base fee function, like base fee that basically every transaction has this base fee that it needs to pay. But then other fees that are associated with that block are going to actually be burned. So now, like right now, the way it works is miners are also getting the fees in each block on top of the block reward subsidy. So moving forward, it's just going to be you're only getting the block reward subsidy to incentivize mining, and then all the fees are actually going to be burnt. So now there's a deflationary mechanism through Ethereum. And I think they were also discussing basically if you're holding Ethereum, like you could be receiving some of the fees as well. So that's a way for, like the network is so congested, it's too expensive for you to even transact with someone. That's a kind of like a smaller holder, but here, instead of like selling your ETH because you're all bearish that it's has so much demand and you can't actually afford to transact on it, you're now receiving like those fees themselves, so that you have less of an incentive to dump. I'm not. I think that was something that was included in the proposal or not. I just know that the first two things I mentioned are definitely true, and I think that's going to really change the some of the anti like narratives on ETH. But the thing that trips me out about it is like, dude, the fees are so high because people are actually using it, right?
Yeah.
It does suck because it prices out most market participants. And it's like, well, if this is really going to scale, like we need to solve this problem. But like we will. It's just going to take a few years. It's almost similar to like how Bitcoin. I honestly think like the rigidity of Bitcoin is a feature, right? It's really difficult for Bitcoiners to come to consensus on upgrading the protocol, but that's in some degree that is a benefit, right? And I think going back into the price action of ETH, that could be a result of basically like sophisticated yield farmers trying to remain delta neutral, right? So they could be opening up like shorts or whatever, and then also like Ethereum is kind of the exit pair for stuff. Mm-hmm. So most DeFi protocols like or that yield farms had like their altcoin like alt ETH pair, right? And so ultimately, when you're taking profits, like you're selling that thing and buying into ETH, but then you literally just got a bunch of risk-free dividends, right? So then you might be more inclined to just be like, oh shit, well I just got this money for free, like I don't even want to hold it in ETH. I'm just going to dump ETH and then buy USD, or like USDC or whatever, or go into stables. So I think that could have been the overall like market phenomena. But to be honest, like I don't know about you guys, but the price action from like November, October, like surprised the shit out of me. And if you like, obviously I'm pretty bullish on stuff long term, but I did not expect things to go parabolic. Well, I was saying like February alt run, but it's still like you can really have a thesis and like have a conviction to your thesis, but then it plays out so quickly. You're like, oh shit,
yeah.
Especially with like how mainstream DeFi and NFTs come. It seems surreal, dude. You know what I mean? Like these people are talking about like everything we've memed about for years is like coming true now, and it's exciting to see where this stuff goes moving forward. But with Ethereum and like the whole narrative of Ethereum killers, I mean, I'm heavily invested in Avalanche. That's like kind of my layer one bet. I had a bunch of Polkadot recently exited out of that. And so the reason why I do Avalanche is because it's just compatible with Ethereum at the byte level. But Ethereum is honestly like, dude, there's so many people that have built on Ethereum, especially all the builders during the bear market. Like Aave was built during a bear market. You know what I mean? It wasn't like they got a huge funding round because everyone's like euphoric and there's a surplus of capital. Those guys really put in the work, like Stanny and Mark and the whole team over there. And I mean, Compound wasn't really, it was built during the bear market, but it had a lot of VC backing, but still like what Robert Leshner and the rest of the team have been able to accomplish is still impressive. And then you got guys like Andre who are just insane. Like doesn't give a shit about anything, just builds, and just is one of the best devs and builders in the space. And so there's like this core competency group within Ethereum that I don't think are ever going to leave. And there's just too much network effects. Like I can see NFTs finding a home on a different blockchain, and maybe it's Solana or something, right? Like, because right now NFTs really price too many people out. Like, if you want to talk about collectibles, digital collectibles should not be costing more than the principal price of the collectible to buy, bro. That's stupid. And so that's definitely an issue that we need to fix. But there's no network effects around NFTs, unlike DeFi, right? There's so much composability. I was reading this interesting take the other day that Ethereum's actually like has developed such a large moat that it's going to the point where it's almost impossible to hard fork it because there's so many stable coins on Ethereum, right? There's so many, there's Curve, Aave, Compound, Yearn, and they're all like have a degree of like interoperability or like not interoperability, but like composability between them, right? And then Sushi and Uni and all this stuff, all these money Legos together. But that doesn't mean I'm bearish on other L1s. I think moving forward, we'll see more like app specific chains, kind of like the NBA Top Shot model, how they created their own chain, like Flow blockchain.
That's interesting.
And that's why things have been able to work out. Yeah.
Doug, I feel like I've been the one pick endless, for my own enrichment, also that for the audience, directing questions. I know you had some stuff to. I know you take a separate view on fees. You want to mention NFTs. Anything kind of come up from on your radar from what's been discussed so far?
Yeah, I wonder what your opinion on the whole. Okay, if people are using ETH, it's kind of getting expensive, right? We talked about this earlier. But like, if we're expecting this crypto thing to really take off, we'd expect users to, 10x, 100x, 1000x, right? Do you think that's solvable at all? Like, if we can is it possible to kind of put all of these people on ETH or in general just on a layer 1 that's existing right now? Or do you think that's just going to come in the next 5, 10, 15, 20 years?
I mean, I think to some degree I could see like the world becoming a multi-chain, and then having like a lot of abstraction between that. Because you can just have like, maybe it's like you're interfacing with a bridge, right? To get to Ethereum, and like maybe the protocol you're like bridging from is like taking the bulk of the fees or something, because it's some kind of like protocol that bridges between it. But I think it's hard to be a maximalist, even if you are like an ETH maxi to some degree, like I am, because there's just going to always be like other networks that find their own niche. And I think ETH got really not like lucky, because it is because of the merit of the developers and the community on Ethereum, but they really created this large network effect around DeFi, right? And so moving forward, it's going to be very difficult for other chains, I think, to kind of block that chasm. But at the same time, we've seen time and time and again, if you incentivize liquidity, like the liquidity will come, right? Like Pangolin is basically a Uniswap fork on Avalanche, and I think it got to like 100 million or something TVL, and that's just because it like, dude, if you have Avalanche and you have stables, or you have an ETH or whatever, and you go and you look at the APY, you're like, oh man, like I'm okay with eating any impermanent loss that could happen from this, because I'm really bullish on both of these assets. So why don't I just go press a few buttons, figure out the technicalities, manage my wallet? But the thing with that too is like it's like to some degree smart money's doing that, right? Because it's some technical oversight that's required, and it's painstaking, dude. Like you could lose all your money. You know what I mean? You literally could fucking lose all your money. So because we're like the beta testers for all this stuff, right? But I think I can't really confidently say everything's going to just be rolled into ETH. I just think that as Ethereum continues to develop and people continue to build on Ethereum and its network effects grow, like, you know, but part of when people discuss like, oh, Bitcoin can't go to zero, it's like being traded on the CME, CBOE, like there's a reason why Ethereum is on the CME. And I'd imagine that right now is a great time to be looking at Ethereum, because maybe like you guys, like Cred mentioned earlier, the performance has been kind of subpar compared to Bitcoin's been very beta in that regard. And maybe smart funds are looking at Ethereum as like the catch-up trade, especially as the economics of it improve and DeFi continues to get kind of thrown into the mainstream. But like I can see the world being multiple different chains interfacing, but I'm really bullish on Ethereum moving forward. I do think though that once the fee problem is solved, that's going to mark like a local top maybe across some projects, because right now, like if let's say I own like $1,000 worth of some shitcoin, and I'm not going to sell it on Uniswap if I, you know, basically approving the transaction and then actually doing the transaction itself ends up costing like $100. That's 10% of my portfolio, right? So it's forced, like people are being forced to hold right now, and maybe we'll see actual profit taking happening once we solve some of these issues. But yeah, Ethereum also is kind of, it's so big, right, that guys like even like Aave, which just exists on Ethereum, they have to be really mindful and cautious when they decide to upgrade their infrastructure layer, right? Because if Aave is porting over to a layer 2 and some issue arises because of you know, there's just some bug or some weird thing that happens that you just can't really foresee unless you really diligently do stress testing before you go live with it. They have to be mindful of this, because it ultimately, like, Ethereum is a lot of people's bank. It's my bank, you know what I mean? And I would like them to maybe move slower and just for the trade-off of diligence and making sure that there is no issue with like funds being lost or any type of like network security issues.
Yeah,
that's really interesting. So it kind of sounds like you kind of expect the scaling problem to be solved relatively soon-ish, right?
No, dude, no. Like the scaling problem in the sense of like maybe we'll see like layer 2s rolling out. So, but then that scaling problem, it's still very siloed, right? It's just individual layer 2s that are like people maybe that are rolling out to Matic or rolling out to XDAI, but that doesn't mean all of the Ethereum network scaling issue has been resolved. I think that scale, like so this is the issue too, right? In crypto, we have such a like idiotic like time horizon factor of things. You know what I mean? It's like things have 15x in the last like 6 months, right? And that's just like ridiculous. And we were like, things need to keep moving faster and faster. But you know, for me, it's like if this thing is going to take a few years to really fix some of its issues, like the EIP stuff, I think is going to solve a lot of the problems with regards to the fee structure. But then to have true scaling, right? Because it's not about scaling how many users are here now. There are a lot of users here now, but for when you ask that question, like the scaling issues, there's still a significant amount of people that don't even have an Ethereum wallet or have never interfaced with a smart contract. So to get to the infrastructure and have the enabling layer to be able to actually process all of those users and all of those transactions, all those smart contract interactions that are going to come in the next few years, I think there's a strong symbiotic relationship there and I think the next 2 to 5 years, we start reaching that critical mass where, you know, it's become a very normalized thing that people are using applications that are built on Ethereum, but they have a lot of abstraction layers to how you're actually interfacing with them. So it's not like, I think the paradigm will eventually shift away from crypto native applications to where you're like actually managing your own wallet, you're signing transactions, all that stuff, to where it's going to be like, I don't really care, like similar to the internet, right? Like when I go on the internet, like I don't actually know that when I type in a URL, it's like, it's pinging to like an IP that's like then interfacing through like a DNS to get me to the fucking website.
Right, yeah.
No one gives a shit about that, right? And we're gonna get to that point, but the scaling issue is because we can scale. Like if we were able to scale it now, it's still not scalable because it's still not nearly as big as anything else is, right? Like we're gonna have way more users, and that's what I'm thinking about. It's not. Are we like? Yes, we are. I think we are going to see scaling for things like synthetics, Aave. You're like the protocols that people are actually using right now. We will see those shift over to layer 2s in this year. But the image is way bigger than that, right? It's not just about people that are here now. It's about who's to come, and we're going to build the infrastructure for them moving forward. Well, I'm not, but the Ethereum Foundation is.
This kind of raises, at least to me, what appears to be one of the difficult like contradictions in Ethereum in the short term, whereby you need it to be moving quicker than Bitcoin to preserve its value proposition and to catalyze all this development, DeFi, new finance, and be more experimental, etc. But at the same time, as you get more people using Ethereum as their bank, or you know, taking more risk with Ethereum one way or another, you still need that rigidity that you mentioned earlier, right? Those two things can end up being quite hard to balance. Like you really want to push the experimental scaling side, whatever, but as more people kind of use it as their bank, you got to be more careful, right? I mean, that'll be an interesting.
And ultimately, we're still moving significantly quicker than the fucking banks are. You know what I mean? And the BTC Ethereum relationship is quite interesting because for so long people were like, oh, you know, it's either one or the other. You're like, oh, why? Like I'm a Bitcoin maxi, like I don't believe in Ethereum, or like I'm an Ethereum maxi, like Bitcoin is like a pet rock, like it doesn't do anything. But when Wrapped BTC came around, I was like, holy shit, this is like made me really bullish on Bitcoin again, because I thought of like, dude, Ethereum is just basically a layer 2 for Bitcoin then in that context, right? And so that's what's really interesting is if BTC becomes the premier store of value in other chains, but then the other chain, like so BTC. Just say, let's say in 3 years, right? It's like, let's say BTC somehow becomes the piece, the asset that is used the most in collateralization, right? For loans or in DeFi in general. And it's like Wrapped BTC or whatever. Like there's still room for Ethereum there based on what they're doing now with the EIP and moving forward with like turning Ethereum to proof of stake and like how the actual asset for the native blockchain can continue to like accrue value without like it having like its lunch eaten, for lack of a better term, by Bitcoin, right? That the Bitcoin stuff is funny too, because you know, like Lightning and Blockstream, like they haven't really done all that much, but if the way I think about it is like it's very symbiotic. It's not one or the other, because ultimately it's like Bitcoin is digital scarcity, right? That's the whole pill to take with Bitcoin, and that's what people are slowly waking up to, is like, oh, like digital scarcity and like immutable transaction, how those can work. And then they could, once they understand that, they then can understand Ethereum, right? There's not a single person out there who's an Ethereum bull that hasn't heard of Bitcoin, You know what I mean? It's like all these things, they like teach you different ways, and allow us to unlearn what we think about value transfer and all this stuff. So that's the whole thing, is like, if you first, you need to understand digital scarcity, and then you can start to understand like how can digital scarcity and digital value be applied with decentralized computation and trustless computation, and like math-based agreements rather than brand-based agreements. And then how can that in total, like the culmination of that, then be applied to change the way that we transact value with one another, and design social protocols.
Awesome. I mean, yeah, I obviously don't have anything. I mean, I agree on the distinction, like the ETH BTC thing. I was literally talking to my dad this morning, and on our walk, and I said like, hey, you know, when people say Bitcoin's only good for speculation, this is like half tongue in cheek, but I'm like, now you can just wrap it and go participate in decentralized finance. That's like a cool use case for both Bitcoin and Ethereum, in my mind, at least, when you're talking to normies. So that's cool. I wanted to kind of get a. So we talked about potential scaling issues, kind of short-term and long-term. We alluded to the idea of Ethereum's lunch being eaten to some extent by less expensive and accessible chains. Let's get a couple of like hypothetical trade ideas, right? So the first one would be, for example, let's say you're a big subscriber to Ethereum's network effects, and you really think that this kind of short-term, late-cycle hype as the Binance Smart Chain is kind of a last hurrah, and Cardano, etc., and ultimately things kind of converge back to ETH. If you subscribe to that bullish Ethereum view, what's kind of the best way to express that from a positional or trading point of view? Because some people might share that, but then ultimately think like, well, look, I was long ETH when it was like the main thing for all this DeFi stuff, and I didn't make shit. So do I have to then do I long other coins which rely on ETH, like protocols which are ETH native? Do I go for ETH USD itself, given that kind of CME argument? So in your mind, at least for the first one, if you subscribe to the bullish ETH network effect, etc. arguments, how do you bring that to life from a maybe macro trade point of view?
So I guess probably to one degree you would want to buy ETH spot rather than go through the perp route, because the funding will probably get wrecked, and they love running the lows. Like trading Ethereum on margin or like on leverage is just a pain in the ass right now, right? Or it has been for a while. So I'd probably go spot ETH, and then I honestly, like, I got caught off sides with Matic. Like I was like, okay, like the Ethereum scaling narrative, that's going to be the narrative that I need to look at right now. And then Matic just ripped, XDAI just ripped. But I think the way to do that trade is maybe short other layer ones against ETH, right? And then long spot ETH, and then maybe even pick up something like Aave and like Chainlink. Chainlink is going to be building out a layer 2 solution, like through like Off-Chain Labs, called Arbidium. And I personally think that could be more interesting than Optimism. But that's the thing, right? It's like if it's hard to actually put a pedantic trade for this out there, because I'm working on this right now, is trying to figure out how can I take on-chain analytics and find a prevailing like narrative or like pattern there, right? With like how are people's behavior actually working? Like if people are getting really bearish on ETH or like in assets, like how does that look like on the side of like Aave's order flow, right? Are people then like selling collateral because they need to close loans? Or is smart money closing loans prior to like a big drop? You know, like it'd be interesting to look at the dates leading up to the 13th or 14th, depending on where you are, when we had a local top there, and then recently on the 23rd, 24th, right? Like the days leading up and the days after. Like how do people actually kind of place like their footprint on chain with what they're doing? Like, are they feeling bearish or cautious? But I think it would be ultimately like short other layer ones against ETH, long spot ETH, and maybe pick up some like Aave and Chainlink. I really want to see better index products for DeFi.
Agreed, yeah.
Right? Because the issue is like there's so much shit going on, and it's like so many of them are like correlated, right? And just being able to, like, if I just gave, like, I mean, ASCII does this, DPI does this, like DeFi Pulse Index, but just being able to pick up a layer like, oh, this is like the long ETH basket, right? And it could have some shorts in it, and it has longs on ETH and like maybe some of the things that are really going to get value from ETH. But yeah, I mean, it's weird to even look at the prices nowadays and be like, this is going to keep going up. It's like, whoa, dude, what is going on?
Yeah, it's one of those, Flood, of course, it was his thing because he was up so much SNX and other stuff, and Bitcoin. He was just like, the price is the price, right? Which is so true, because I remember Donald and I were discussing whether to add Sushi. We tell the story all the time because it's so weird and funny. Like, we thought we were super late to adding DeFi stuff from like a trading point of view. So Sushi was at like $2 or like $2.50.
Chads.
And we were like,
Chad.
shit, we had this internal discussion, which is basically us arguing in Discord DMs like every single day. And we're like, oh, is it too late? This is up like 10 million X since like Sam took over, basically. Like, what do we do with this? I'm like, well, look, dude, like the price is the price. If it's going to keep going, like this is where it's going to keep going from. And I'm sure as someone who got in even earlier, like the valuations are just so insane. At a certain point, I think it even helps to be late to DeFi to some extent. Because
yeah, dude.
You know what I mean?
Straight up. Because it's like, bro, literally the whole thing that trips me out is like, they gave me this shit for free. Like, whoa, how is this shit worth this much money? You know what I mean? That's like, dude, holding a parabolic asset is like a skill, especially within the context of Sushi, right? Because Sushi, when I think all that's is said and done, is going to go down as like one of the greatest redemption stories in history. It literally went from this shit is a scam, let's farm it and dump it, to, oh my God, like this is, like they're really building out some cool stuff, and I'm excited to see what the bento box release looks like.
Yeah, no, me too. I think didn't one of the funds actually buy sushi.com? So when you go on that website, it's Sushi Swap,
Future Fund.
Yeah, Future Fund. So
yeah,
if you get to
sushi.com,
it's DeFi. To me, that's kind of crazy. I don't know about you.
Yeah, it is crazy, dude. Like maybe the real trade is not even fucking trade DeFi, bro. Maybe it's domain name squatting.
Yeah, you know what? I actually wanted to. This kind of raises one of the things that came to mind earlier. You mentioned on-chain, almost analytics for ETH, essentially, and there's some like players around which track big wallets. I think Nansen does some of that kind of stuff. So are you bullish on-chain ETH analytics generally? And if so, in what companies, or how would one get exposure? How do you view that space?
Oh, Nansen is super Chad. Definitely check out Nansen. I'm a big user of Nansen. I'm working on building up some proprietary tools with some devs I have. But yeah, I think Nansen's like the go-to. There are things like parsec.finance. There's Dex tools, Astro tools too. But those are just basically, outside of Parsec is more of a dashboard. I really like Parsec. It's just the UI is kind of iffy, but it's very complex. Like you can see historical lending rates. It even has like a order tracker, like where it'll like buzz you for like large Uniswap or Sushi Swap orders.
Okay.
But Nansen is really interesting because, dude, they provide a lot of alpha. Like they get to tag wallets pretty well and all that stuff. And the guys over there are just absolutely killing the game. But the thing too with on-chain analytics is like you have to understand what's going on. Like even I struggle sometimes with trying to like look at a transaction, like what is actually going on in this transaction, and looking at a string of alphanumerical letters doesn't help either, right? Because you're like, wait, what is this? Is this the transaction that came after or before? And Nansen kind of helps with like the tagging that they have in that end, because they do some of the hard work for you. Like right there, when you go on their platform, it'll, instead of like this wallet is 0xb1 blah blah blah, it's like, oh, this is a Chad wallet or something. Like it'll just be like DeFi Chad. Yeah.
Okay. Doug, I think we want to get at least a broad overview of NFTs, given they're running so hot. I mean, Kobe's basically been making millionaires. I don't know if you've been following. He's been making some great streams where he basically takes these artists before their drop and kind of talks to them as it happens, etc., etc. NFTs are hot. I don't entirely I'm not bearish NFTs because I think people fall into the trap where they think just because something's bubbly, that means it's going to be a bubble forever and there's no kind of underlying value. I think as crypto investors, we should know better than that more than anyone, right? For me, the closest analogy I can make is, I mean, you mentioned TF2. Like, I used to play CSGO, right? And like CSGO skins were the shit. Both as a kind of liquid currency, and they were tradable and they held value like within the ecosystem itself. So I kind of understand like online native or only digital stuff holding value like that. I don't think that's a controversial position to take with these, but we've got hash masks and people doing art, and there's the whole you can just screenshot it meme. Like the NFT discussion I think is understandably in its very early and nascent form. For people who don't have any understanding of what an NFT is, why can't I just screenshot this thing and why is it worth anything? Just any kind of broad introductory thoughts on how you see that sector of, I suppose, an extension of the Ethereum ecosystem would be awesome. And Doug, if you've got anything to add questions-wise as well, please do.
You got anything to add, Don?
No, I'm just interested in what you're gonna say.
The NFT stuff is super trippy to me because I think NBA Top Shot was probably like the best trade of my life, and I literally just bought this shit because I love basketball. Like this was back in like November, December, and I felt stupid too. I was like, bro, I just spent like $1,000 on this, but now like my NBA Top Shot portfolio is worth like 200K. I'm like, what the fuck happened, right? And the thing is, like, I think the whole collectible stuff is like a vestige from when we were like hunter gatherers, right? Like people just love collecting shit and kind of being like, I have this, you don't. Right. And then you introduce like the degenerate nature of crypto dudes into that. It's a little bit funny. Like I was in a bidding war for this like golden monkey NFT. I honestly don't even know what this shit does. And this other guy who also doesn't know what it does is Danny, who's like an absolute chad. Like this guy like sold a bunch of Axie Infinity Genesis land for a few million. Recently sold like the CryptoPunk with no attributes for like 550 ETH, and then it went up to 880 ETH, which is hilarious. But got in a bidding war with him. I was like, who is this guy? And I go check as well. I'm like, fuck, dude, I am not gonna go to toe to toe with this guy, right? And just let him win. And then we started talking and DMing and whatever. And that's like the whole thing with NFTs is like it's community, right? And things only have value because we agree they have value. And I think to some degree, like the crypto art movement, it's people that are making life-changing money, right? Like Keyboard Monkey went out and bought like a hash mask for like, or was it Keyboard? I think it was Keyboard Monkey. He bought a hash mask for like 420 ETH, right? And that maybe sounds like a lot of money, and it is. But for some people that like maybe, you made life-changing money. There are people getting, like some people are getting hilariously rich, right? And they want to maybe buy something that captures like this temporal moment of like when they were being a participant in like the entire new way that we're going to transact financial stuff with one another, right? And they want to like kind of buy this piece of history. So there is that aspect too, right? Where it's like this is like first mover art stuff.
Mm-hmm.
But then moving forward too, like NFTs, like we talk about crypto and how like crypto unlocks liquidity, right? Remember the old memes of like making security tokens behind everything, oh, like securitize your land, like it'll be easy to sell. But then back in the day, like why would I securitize or tokenize a home when I can't do anything with the home in terms of I can't like deposit my tokenized home and get a loan against it? We can now start to do things like that, right? And with NFTs, there's something called NFT-Fi, and you can actually deposit an NFT and then get a loan against it. So you're using your NFT as collateral. But then this is the real problem with all that is how do we appraise these things, right? How do we appraise these things? How do we make sure there's not wash trading being involved? Because if I have a CryptoPunk and maybe I buy it for myself from $1 million or for like whatever $1 million, and now it's appraised at $1 million. I go deposit it into a platform where I can borrow against it. I actually don't even value it as $1 million, so I don't give a shit about ever repaying my loan or not, right? I'll let it get liquidated, but because I inflated the value on its own, I was able to then take out a huge loan that I normally wouldn't have been able to.
Yeah, I didn't even think about the unlocking liquidity side of things. I really like your point about, I know it's kind of almost ironic, like the subjectivity of value side of things and the first mover advantage. But I assume a lot of the, like, I was listening to Suzu on one of the podcasts he did, like an early DeFi on Uncommon Core, and one of the arguments he made when it comes to sort of bubble territory or short-term top, etc., is when you see copycats come up, which don't add any value whatsoever and just try to kind of ride the trend. So there's no innovation. It's just there's so much money sloshing around that you just get involved and try to catch a piece of that pie. For me, I kind of just started laughing pretty hard when I saw, hash masks I thought was super cool. And then you see like bash masks and all these other like competitive chains coming out with their own versions.
Yeah.
Do you think that has any kind of dilutionary effect on the value of these kind of first or real NFTs, or is it just the same crap of, oh, let me try to copy this and see if anyone falls for it sort of deal? Is that just normal market
necessarily
behavior?
I can kind of comment on. I don't really know how to think about it because it's like what I think about it is like flattery or imitation is the greatest form of flattery, right? So obviously you're doing some shit right if they want to like rip it off, but then like this is the thing that's weird about NFTs, and this is thankfully like what I'm happy about. And as someone who's like early into NFTs, I like this shit because I was like, okay, I get to kind of give back to people, right? Like I'm buying art straight from an artist. I know like the money's going straight to him, and that feels pretty cool, right? Being able to empower people like that, and some of the shit looks cool, right? I'm like, okay, this is pretty sick. Like I guess I own the rights to this, or I own this now. And that's what it's always been about for me, and that the community aspect. But now it's just insane to think about like all these things are getting so much value, but I think it probably does add to the value of the original, because it's the same thing of um like people to this day, right? Or not even to this day, there's like you can go on the market and you'll find a bunch of stuff like Dali prints, right? It's not even an original Dali, but people are like buying the print and maybe it's signed by him, right? And that alone adds some value to it. And I think it's similar in the sense of like if you're doing something right, people want to copy it. And so the trippy part though is that people are like spending hundreds of BNB on something that's like a fake, right? Because it's like if you want to get into like an NFT, like if you want to own an NFT or like be a part of an NFT, there's tons of other projects out there, dude, that like aren't straight up just scams. Like you're not like I just don't understand like why you would buy this if you know it's like not even the real one. But like, I get like I don't have to understand, right? Maybe some people just think it's fun, and that's completely okay, right? But then if that's the reason, it just becomes kind of frivolous, right? Like at what point? Because right now everyone's making so much money too, right? So you're like willing to spend money on this shit, but then when the music stops, people are gonna look back at their NFTs and be like, "Damn, dude, why did I spend all this money on this?" Sometimes I even think about that. Like, why was I fucking spending multiple ETH on NFTs when it was like $200? That was so stupid. But it is what it is.
Where do you think the value will ultimately converge? Like, as the fat gets stripped off, like one of the use cases that I really like as well is directly helping artists. And then, you know, without having to use Patreon or any kind of middleman type of stuff. And then you've got like provable ownership, all of which is really cool. So once the market cools off, and I assume NFTs stick around, which bits of NFTs in their current form do you think will retain their values? Or which sectors should people pay attention to, which aren't just products of purely surviving because there's a bull market?
So I actually think that the entire NFT model right now is actually wrong in terms of like the average price of NFT is so inflated, right? And I think the limiting factor on that is also gas fees, right? It has to be economically viable to some degree. And so I actually think that the way people think of NFTs is wrong. Like one model that I'm kind of working on is having one NFT that serves as like Polygon Games is the project that inspired me to really think about this model. You have one NFT that serves as a membership badge, right? By owning this NFT, it's like think about it as like a lifetime subscription to something, right? So you own this NFT and you have this lifetime subscription to something, and then you're getting all like the content associated with that. So you maybe like I decide to start making some crazy educational content or something, and part of that is like you get to buy this NFT for like $10,000, $5,000, whatever the pricing may be, and you get lifetime access to anything, right? But then you should also have the model of like micro content, right? Like you pay $1 to buy this NFT that has metadata that is just like maybe it's a quick 5-minute analysis on something, things like that, right? That is where I think the model is going to eventually go, is really allowing micro payments for micro content in a way that could be quite interesting because from the community perspective, right? Like if what you're doing is so good, right, and there's only a limited amount of lifetime membership badges, you could postulate that on the secondary market through supply and demand mechanisms that the NFT, like there's such a demand for your content and people want like this lifetime access to it. They don't want to keep paying $1, $5 for everything that you're dropping. They want to just be in it for the long run, and other people will see that value too. So the price on the secondary market actually sells for more than you even sold it for, right? And then you can actually like hard code like royalties or dividends in it. So let's say I sold it for like $100 over the course of 5 years. I've built out such a strong following and profile for myself that now these lifetime membership badges are going for $10,000. And each time it's sold for $10,000, I get 10 or 20% of whatever that transaction is. So that could be 1,000, 2,000. So now from the economies of scale, it's the same every time one of these gets resold. I'm essentially making 10 to 20x on how much I was making 5 years ago when one of them was getting sold. And this is still motivating you to continue to build and produce content and have value accrual for anyone that wants to participate in what you're doing, right? Because you know that you're still receiving your cut. And that was like that type of like licensing type model was never possible before.
Almost like a utility token in some regards, right? So not just I bought this, I own it, and this is a token of my ownership, which kind of I do nothing with. I mean, maybe you said collateralize it, like in some examples, but yeah, I mean, I'd be really keen to. I really like the art use cases and stuff. The utility, I'm sure, will come up. As you mentioned as well, I'm sure at that point the kind of arguments become, well, do you actually need ETH or do you need a blockchain at all to perform those sorts of functions? But honestly, with the whole like digital meme taking over, I can see that being a just continuing, right? Don, do you have any thoughts on the direction in which the NFT stuff's going to keep going? I know you follow the art stuff, like just on your newsfeed and stuff, when the big kind of punks and pieces of art are sold. But what's your take on all of this?
I think, ironically, the stuff that's expensive now is probably going to do the best. I mean, it might nuke like and go down like 50%, 60%, 70%, but I think that's going to have a bid, right? So you have like these punks. In my mind, at least, it makes sense. Like the stuff that's actually trading like high now, that where there's demand there, it's actually gonna do the best in the sector. Because if you think about it, like in the real art world, and I'm not really into like all the kind of art stuff, but in the real art world, it's the same, right? You either have like something that everyone, like a lot of people want, and then that's going to do well, or you have like a bunch of artists that can barely make a living, right? I think it's pretty much the same, like from an investing kind of perspective. People need to kind of look at it more from an, okay, I'm investing in art rather than, okay, I'm trading crypto right now perspective. But that's just my view, and I'm not really into it all. I think most likely the smaller stuff where people are like, okay, I'm just going to put $500 or whatever and buy this NFT from this artist I like, there's a good chance that you're never going to find a buyer again at some point. But if you then look at it from, okay, I've just supported my favorite artist kind of deal, I still dig it. I still like the idea because, I mean, if you think about like all the people that are working on it, like on art
think about
in
Twitch,
general,
dude. Think about how many people just donate to people on Twitch.
Yeah.
Right.
Yeah, like half my trading income goes towards simping Pokimane, right? So I mean, I understand that.
Oh, I'm glad you brought it down from 80%.
Yeah,
job,
yeah, I'm getting help. This is an intervention. I think it'd be nice to. I mean, you've been very generous with your time. I've certainly learned more than I've ever known on this topic, and I think it's going to stick around. It's not going anywhere. The ETH discussions, the scaling, DeFi, NFTs doesn't mean it's going to be as prevalent as it is right now. It's understandably hot, but these just seem quite sort of almost built-in use cases for these platforms. For someone listening, and they heard a bunch about DeFi, NFTs, lending, collateralization, DEXs. We covered so much ground, right? And we'd love to also have you back on in the future to answer questions and maybe do this again when something's hot. But for someone who just this maybe piqued their interest or their imagination, and they want to get involved, right? Like you mentioned, there's still opportunities in participating in governance, setting up wallets, trading on DEXs, providing liquidity, etc. Someone just says, okay, I know nothing. I now this piqued my interest. I know a lot more than I did previously. How do I get involved? Where do I go? What do I do? How do I kind of become part of this beyond just kind of trading it? Where do you kind of point people who want to just gain and get involved?
Oh yeah, probably get on Twitter, right? Start joining the communities. This is the actually stark contrast between like NFT Twitter and like the rest of crypto Twitter. Everyone's like super friendly and helpful because it's like not necessarily a zero-sum game, right? Unlike normal trading and stuff. So just hop on there, like start following different projects, start following the artists too. Like follow Pranksy, follow Seed Phrase, like Danny, follow follow Nifty Gateway, Arzora, like some of those platforms too, to get an idea, right? Of like, okay, these are like the actual marketplaces. But like honestly, it's still hard to track NFTs very well, right? Like I can't even look at the volume on OpenSea in a way that's easy. And I think there are some NFT like news places. Like I don't really read stuff from other people. I just kind of do my own thing. So, but maybe check out some of those, and then like I think the whole so this is how you get alpha in NFT. This is different than alpha in any other market, right? It's ultimately hyper curated. You have to start following like NFT artists and think of them as like influencers, right? And be able to understand like the taste, or be like, okay, this artist it may like is going to be on Kobe's stream next week. Like maybe I should start looking at some of his early pieces, right? And try to front run people, because now he's going to get attraction. So one of my really good friends who I'm actually working on an art gallery with, he said something that blew my mind. And in terms of, there's two ways art gets value, right? One of them, and this is one that everyone understands, is art gets value from how many people view it, right? But the one that he hit me with that tripped me out was like, art gets value from who looks at it, right? There's a reason why like Hashmask and stuff took off, is because a lot of crypto OGs, same with CryptoPunks, a lot of crypto OGs were the ones that were interfacing and looking at it. And they're the ones that have a lot of like money, right? And now the same thing like with Beeple, and now like NBA Top Shot too, is like you have like literal NBA athletes looking at these NFTs, interfacing with them. So if you can find the communities where you're like, okay, they have major players that are participating or buying, or like patrons to this creator, that's like a really good, that's a green flag in my opinion. And ultimately just follow the people that are building. The same thing how there's alpha and following actual developers. It's the same thing when it comes to these artists and creators, but now it's like hyper curated to whatever their communities are. And a good way to get a more macro view of that is track what's trending on Super Rare, track what's trending on OpenSea, and kind of, I really like Arzora from an ethos perspective, and what they're building over there in terms of what they're doing with like their approach of like artists first. They're the guys that just had like Disclosure or whatever just did an NFT drop there. The Bobby Hundreds did an NFT drop there, and then like one of the founders of Linkin Park just did one there too, amongst other people.
Awesome. So it is really still almost like the same formula for DeFi, right? Get involved in a grassroots level, get stuck in, get your hands dirty, and curate and build a lot of your own information. I think that that's when you know you're early, right? When you can't just point to like 2 or 3 massive centralized hubs of information and say it's all there. When you kind of have to do the digging yourself, I think that's generally
exactly, dude.
Awesome, Sobi, you've been an awesome guest, and I've certainly learned a ton. I'm sure I can say the same for our audience and for the Duck. Where can people find you? Where should they look for you? Any final
on the blockchain,
shout-outs?
bro? No, just follow me on Twitter, dude. Sobi Life. Don't follow my YouTube yet because I haven't been doing shit, so it'd be kind of a waste. But when I actually start making videos again and I'm out from Montana, follow me on that too. It's just Sobi, I think. It's hard to find me on YouTube, bro. They're trying to censor the kid, dude.
Trying to suppress the alpha. No worries.
Yeah.
So the links to the Twitter and the YouTube, they are in the chat. We'll put them in the description as well. Sobi, you've been awesome. Thanks for hanging out with us.
I appreciate you guys. Thank you for having me.
Of course, we'll love to have you back. The Duck, any final notes, comments, questions, concerns, criticisms of our guest? Anything to leave our audience with into the weekend?
No, I really appreciate it. Every time I get super quiet during these, it's just because I try to absorb as much as I can. So I mean, it was really quiet this time around because there was much to learn, so I really appreciate that.
That's just his way of saying I talk too much, but it's fine. I'm used to it. We'll just fight over it as soon as the live stream's over. Thank you, of course, to the show sponsor, which is Blockfolio. Check out Blockfolio. Their links are in the description as well for a seamless mobile trading experience. We'll have more content around that soon. That's all from us. Thank you to everyone. Have a nice weekend. We've actually got 2 more videos coming out before the end of this week. So subscribe. Let's get to 100 likes. All that good stuff. Take care, and we'll see you next time. Bye-bye.
Thank you, guys. Talk soon. Bye.